Good afternoon. Ira Epstein with your agriculture wrap-up, and this is for Monday, the 30th of March, 2020, and the time just getting on to 3 p.m. Daylight Standard Time. So a different type of Monday, a big stock market to the up day, not the Tuesday reversals we've been getting. We started off lower on Sunday night, and if you look at some of these ranges, those lows were made last night, and you've had rather dramatic reversals. At the same time, the metal's down a little bit, the dollar stronger, gave up some of the day's gains, and we're starting to see some of the products trying to find their way to a bottom. Now, why do I say a bottom? You got to 53.27, getting back up over 61 cents a gallon, 800-point move. It's got all the indication to me that the market is finding a zone where maybe prices are getting a little low. Now, what we have to focus on as we're in agriculture is where does the demand for the meat going to come in? And right now, you start turning your attention to planting intentions. Why? Out in the farm belt, it's not like it is in the cities. There's not the stay-at-home orders. The farmer, when he goes out into his field, he's got acres around him, no other people around him. He's going to be out there doing his work. He's going to be doing his planting. He'll let Mother Nature do the rest for him. As we take a look at a weekly area chart of closes on beans, you can see that the market still has a downside bias. I define bias as this way. I look at where the 18-week moving average of closes is. If the market is under it, simply put, I have a downside bias. If it's over it, I have an upside bias. It's a filter on other pieces of my work. When I go to a bar chart, I look to see, am I getting a pattern? Am I going sideways? What's going on? I'm going to argue that we're going sideways right now. The market caught, let's call it between the 898, 872 level in round figures. As we step over here, we can see that that 872 is really an 871 and a quarter. What's the pattern we currently have? We have a pattern, if we take a look at this, we have a high. That high was higher than that one. And this pullback, and now the rally over the past 2 days, has given us higher lows, higher highs. That pattern gets broken and turns bearish if you take out 871 and a quarter. Why? If you did that without first taking out 897, you'd have lower highs, lower lows. That is the reason for that. If the market did that, the key to it to becoming bearish would be closing under 866 and a quarter. So what don't the bulls want to happen? They don't want to see this 871 and a quarter taken out. They want to see that that holds and that the market's able to stay with the upside bias, the trend up, and start getting over and making, again, higher highs. So we've given you the two arguments. What about Bollinger Bands? Why do we look at Bollinger Bands? These black dashed lines are an algorithm designed to keep the market trading within them 95% of the time. They have great importance when the market narrows in. They have great importance on a breakout. They don't have phenomenal importance when you get a breakaway from them and the market starts going back to the 18-day average looking to see what's its next direction going to be. If you were to get a big rally, well then anything near that upper band, it's 912 and a half right now. But it is falling every day, and it's falling to the tune of, let me see what we are, about 5 cents a day, as you can see right now. Got that? So it's something I keep my eye on. Slow stochastics. I use an oscillator to tell me is the market overbought, oversold, which way. Any reading over 70 is overbought. So here I am with a reading at 78. Market is overbought as far as I'm concerned. Any reading under 30 on the downside is oversold. So I have an overbought market that's been in an uptrend, sort of drifting now sideways, looking to see what its next direction will be. In the soy meal, we have a pattern now with the action this week of higher lows. That was confirmed last Friday, but remember on Fridays I do a weekly update, so you didn't get a chance to see that. But we got higher lows, higher highs. Like beans, what you don't want to see taken out is the break low last week of 317 and a quarter. If that were taken out, you could end up with the pattern of lower highs, lower lows, and then you're looking to see what happens as you get towards that 311 zone. That would be important to me. Are we overbought or oversold? We are in overbought territory. The market that's trying to stick its head up is the soy meal. You've had this pattern of higher lows, higher highs, and now the market's playing at the 18-day average of closes. Unlike the beans or the meal, it is not overbought. It's got momentum up. Until it takes out 26.23, the trend up, the bias up. Take that out, and you go sideways in the action again. In the corn market, we've been in a downtrend. You can see that we've had this pattern of lower highs, lower lows in the market, but going into the planning intentions, you're oversold. Any reading under 30 is an oversold reading. Let me see if I can get this to move. There we are. In the wheat market, I'm still having to adjust all these different tools that we have here. We have higher low, higher high. The market had hit the upper Bollinger Band, backed away. Now, if we take a look at these readings right through here, it takes 3 times in a row for the market, I'm talking 3 closes in a row, over the 80 level to embed. So we had it today. Let me see if I can get that. We had it the day before, and we had it the day before. So we're there. We have our 3 in a row. You can see that you started off with this on Thursday. Here's Friday. Here's today's action. So until it's lost, until that red line gets under 80, I say the pros are still buying this market, looking to see if they can push the market further. In the sugar market, the big break today sort of throws this chart into a question: where is it? You had lost the embedded reading. I think you see that right there. The idea was, could you get to the 18-day average? It didn't do that. Instead, the market's fallen back. We're now, with it being under 1072, the last break low, you have a lower low and a higher high. That's not worthy of a trade. There is no trend in the market. The bias is down, but you're not trending. In the coffee market, we're still in an uptrend with the pattern of higher lows, higher highs. The market went up, fought for 4 or so days at that upper Bollinger Band, fell back, and instead of going to the 18-day average, it's decided for whatever reason that the 100 days where it wants to hang. Now, if it takes out the low of 115.65 and closes under 114.10, this market would give a new sell signal, because you'd have lower highs, a lower low under the 18-day average, and momentum that is overbought. So the bulls have their hands full. I don't think they want that to occur, let alone close under the 114.10. If it just took out 115.65 and then close under the 114.10, it would go neutral. In the cattle market, what a move back to the downside. I mean, this is merciless. This is a 13-cent move, roughly. It took out the previous break low. So now what you've got is a higher high, a lower low, a market that's sort of flat and pointing down in the momentum. In the hog market, it's just plain bearish. Where supposedly are the Chinese? I'm not seeing them buying these hogs. And I read today how China stepped back into Brazil and has become a major meat buyer. I don't understand that, but yet here we are, and these are new lows for our hog market. You know, when you keep up with these markets, and I talk all the jargon, if you will, of the trade, it's technical. It's all technical indicators. And we've put together with our good friends from Futures Magazine, volumes 1 and 2 of technical patterns. And it covers all these different parts of it for you, be it the oscillators like I'm talking, slow stochastic, MACD, Williams percent R, I can go on and on. The different retracement methods. In fact, this week I'm thinking of doing one of them on where the stock market is right now. I think that could be interesting. Options primer. And one of the most important people don't pay attention to, money management. Before you enter a trade, it's never good after. What is your stop out point? Where would you be wrong? You've got to ask yourself those questions. So how do you get to all this? It's simple. Go to our website at www.iraepstein.com, www.iraepstein.com. Right on the bottom right, you're going to see free offerings. Choose the ones you'd like from there. You can also click up here if you're watching me on YouTube. It'll take you right to that page. With that, I'm Ira. You have a good day. I'm just getting myself back into the new studio and learning my way around it. You have a good one.